Assalamualaikum and good morning to Dr. Norhani. My name is Nur Akila binti Muhammad Nur. My metric number is 264297. Today I would like to justify my opinion on the case study Tests for CFO. Should Pfizer acquire Allergan? There are three characters in the case study of tests for the CFO should Pfizer acquire Allergan. First character is Pfizer Incorporation, which founded in year 1849, New York. They began their business in pharmaceutical business with a candid treatment for an intestinal illness, as it is a common illness in the meantime. By 2014, Pfizer had grown with 100 companies and produced almost $50 billion in annual revenues. They also have a footprint in over 100 countries around the globe. Pfizer have a clear vision and goal, as they want to partnership with everyone and ensuring that people from everywhere can have the access to innovative treatments and quality healthcare. About Pfizer's vision and goal, they attempt to acquire AstraZeneca but failed in 2014 as the deal was undone by residents from AstraZeneca's senior leadership and political protectionism in United Kingdom. Next, Allergan, a public listed company, which was formed after a merger of two large pharmaceutical companies, Actavis Incorporation and Warner Chilcott public limited companies in 2013. The operation of Allergan has made a $13.1 billion revenue in 2014 and have a commercial footprint over 60 countries and their headquarters in New Jersey, which less than 50 miles from corporate headquarters of Pfizer. Allergan had focused its strategy on fast-growing brands and they're able to grow in the future. And the last character for this case is Frank D'Amelio, who is the Chief of Financial Officer, CFO of Pfizer Incorporation. He needs to prepare a recommendation whether Pfizer should merge with Allergan Public Limited Company or not, as this approach is one of the ways for Pfizer since their revenues had declined over the last 3 years because of the tax levy. D'Amelio felt anxious after seeing the stock price had been relatively flat and the investors were going restless. In regard to Pfizer's merger case, the main issues concerned is should Pfizer proceed the merger with Allergan. The idea of merger came after Pfizer's revenue had declined over the last 3 years and the stock price had been flat. Hence, the investors were going restless. Therefore, Pfizer needed a deal that able to improve the company's financial performance and competitive position among another global pharmaceutical. This idea became attractive and concerning after seeing Allergan Irish tax residency, where it provides opportunity to lower Pfizer's worldwide tax rate. Not long after the strategy meets, US Treasury Department had announced some changes in regulatory, which targeting mergers that relocated a company's tax residence to a low tax country called tax inversion. Despite the Emilio legal team has avoided the tax inversion label, the deal carried many of the tax inversion hallmarks, and not to mention, the press had announced the deal made as the largest so-called inversion deal. The CFO needs to compute the potential tax saving on repatriating offshore profits, assign a present value to estimate of what future effective tax rate would be, and considering assumption of $152 billion price tag were worth the tax saving and the tax benefits available when the deal be finalized. The tax rates differed across countries, and United States tax rates were among the highest in the world. Most companies will be merging with a company that was already a resident of a low tax rate country and then use the lower tax country as the tax resident for the new combined entity. It is called as tax inversion. When this occurred, the newly entity was no longer required to pay United States tax rates on profits earned outside United States. Hence, it will help in reduce taxes on future profits that will be earned after merger. Even if a transaction is structured in a way to gain cash overseas, it eventually will be affected to taxes as it will repatriated to US owners. If an exit involves liquidating distributions or a sale to another company, those gains will still be affected to US taxes. Another way to reduce the tax rate is by transfer pricing strategies, which will shift the income to lower tax countries that could have some impact on taxes of corporations paid in the year earned profits. After transferring intellectual property to low tax jurisdiction in other countries, companies manipulate licensing and cost sharing arrangements to avoid or reduce United States taxes. But the cash from global operation is then parked offshore until the tax professional can figure out how to get it home tax free. The problem with this kind of tax inversion and transfer pricing are the lack of social responsibility. That is a relevant moral consideration that a company must consider when they are doing business. This kind of ethical issues could give a bad message for pharma business are spending more energy on reducing their tax liability than the social good they undoubtedly deliver. Frank D. Emilio should consider the risk before close the deal to merger with Allergan, as the deal will impact the tax collection in United States. The US Treasury Department could alter the regulation related to the inversion, as there were some comments on the mergers. It appeared to directly target the proposed tax inversion by reduce the ability of firms to move their tax by merging with companies in countries with a little economic activity. The uncertainty of the context may affect tax rate and the possibility of tax inversion. In addition, Pfizer and Allergan may facing integration risk after the merger, as both companies are a big pharmaceutical company and has a lot of employees, multiple products and locations. This will lead to challenges in integrating the departments and affect the sustainability of gross margin. Before the Emilio decide to merging, he might compute financial ratio analysis for Pfizer Incorporation and Allergan Public Limited Company. I chose to do analysis on the profitability and solvency of both companies for 2013 and 2014 respectively. So the first one for the profitability ratio, we use net profit margin. For Pfizer Incorporation, the net profit margin has decreased from 22.12% to 18.42%. This means the business is getting worse at controlling its cost of goods sold. This contrasts to Allergan Public Limited Company, which its net profit margin increased from negative 8.65% to 12.49%. Hence, the merging of Pfizer and Allergan can rise again. Pfizer net profit margin. Next, we use total asset turnover. So from the table, we can see that both companies had reduced their total asset turnover. It indicates that Pfizer and Allergan not using their asset efficiently and may have internal problem. So here is the last financial ratio I did for solvency ratio. We use return on asset. So return on asset refers to a financial ratio that indicates how profitable a company is in relation to its total asset. So as we can see here, Pfizer and Allergan both falling in ROA, which indicate that there is a room for improvement. So based on the analysis I done, both companies having their own positive and negative return, but they can come back with higher profit and return if they combine their strength and build a strategy to cover their losses. This merging might give a positive return for both companies. Yes, that is my recommendation for the merging of Pfizer and Allergan, which should proceed as the benefit in the future greater than the risk that they will be facing now. Both companies can expand their pharmaceutical business globally, and it will help the competitiveness between larger pharmaceutical companies worldwide. So that's all from me, and thank you for listening. Bye bye.